Nama adalah Jasmine binti Mustazal, and today I'm going to represent about investment objective and investment risk. In an investment ecosystem, clear objectives are important to guide decision making. We generally divide investment objective into two categories. First is personal objective. These are goals that relate to an individual's life needs. For example, insurance protection to safeguard against unexpected event, providing a home, which is one of the biggest financial commitments, emergency reserve, which ensuring we have funds for sudden expenses. Last but not least is education or retirement planning, which requires long-term saving and disciplined investing. Second is financial objective. These goals focus on how we want our money to grow or to be protected. For example, capital preservation, which aims to protect the original amount invested. Price or capital appreciation, where investors aim for their investment value to increase. Next is current income, such as dividends or interest, for those wanting regular cash flow. And last is total return, combining both income and capital growth. By identifying this objective, investors can choose investment that match their risk tolerance, timeline, and also financial goals. Next is investment risk. In the investment world, risk and return are directly related. A high-risk investment generally offers a higher potential return, while low-risk investment offer lower but more stable returns. What is risk? Risk is the chance that the actual return may differ from what we expected, and also the possibility that an investor may face a loss if the expected return is not achieved. This means every investment carries some level of uncertainty. What is return? Return is the outcome of an investment. It can be a profit if the investment performs well, and it also can be a loss if the investment performs below the expectation. Based on risk tolerance, investor can be risk averse, which is prefer safety, require higher return to take higher risk. Risk indifference, which is satisfied even with low returns. And also risk taker, which is willing to accept higher risk for higher potential return. Understanding risk helps investors choose investment options that match their goals and comfort level.
The securities market is basically a mechanism that brings together buyers and sellers of financial assets to facilitate trading. It is divided into two major segments, the primary market and the secondary market. In the primary market, companies will issue new securities to the public to raise funds. This is the only time the company will actually receive money from the investors. Some common methods of issuing new shares include initial public offering (IPO), seasonal offering, rights offering, bonus issues, private or direct placement, and sales of shares to the employees. All these methods will help companies to raise capital for their operations or expansion. Once securities have been issued in the primary market, they are then traded in the secondary market. Here, investors will buy and sell securities among themselves. In Malaysia, the secondary market will be divided into two main parts. Main market is for established companies, while East market is for smaller or growing companies. Bursa Malaysia is an exchange stock market holding company. It provides the platform where stocks, bonds, and other securities are listed and traded. Types of securities traded included common and preferred stocks, warrants, bonds and loans, derivatives, exchange traded fund or ETF, real estate investment trusts or REITs. Bursa Malaysia also will play several important roles in the investment ecosystem in Malaysia. It provides a marketplace for companies to raise capital, offers mechanisms for listing new shares to facilitate the buying and selling of securities, ensure liquidity so investors can trade easily, helps determine the price of securities based on market forces, and provides information on price, volume, and market activity to support investor in decision making.
Securities Commission Malaysia or SC is responsible for regulating the Malaysia's capital market as a whole, and it is also the authority where companies must register their prospectuses before issuing new shares to the public. The Securities Commission has several important roles in supervising exchanges as well as the clearing houses and central depositories. It regulates all matters related to the capital market, including mergers and takeovers of companies. The SC approves licenses to deal in securities and ensure that the market is run properly and fairly by licensed persons. The SC works to maintain investor confidence in the market, to encourage and promote the development of the securities industry through research and training, and to detect irregularities in trading activities that may breach trading rules or security laws.
Focus on licensed intermediaries that help investors to buy and sell in a market like Bursa Malaysia. It is because only brokers can have direct access to the stock exchange, so all trades must go through them. They also assist investors in opening CDFs, trading accounts, provide market research, and also give basic investment advice. In Malaysia, there are three main types of brokers, which is stockbrokers who own the brokerage firm, remishers who work on commission, and dealers representatives who are full-time staff with basic salary. So overall, brokers play an important role in connecting investors to the market safely and efficiently. Besides traditional brokers, Malaysia also has fast-growing fintech investment platforms. These include online trading apps like Rakuten Trade and Kenanga Online, and also robo-advisors such as StashAway. Fintech platforms offer several benefits like low entry barrier and easy mobile access, and also they provide automated balancing. However, there are also risks such as market volatility, technology or system failure, and limited human guidance compared to brokers. Overall, brokers and fintech platforms help to expand Malaysian investment ecosystem by giving investors more choice, more flexibility, and convenience.
I'm going to talk about investment instrument available in Malaysia. There's two types of asset, which is financial asset and real asset. In financial asset, it has high liquidity, meanwhile real asset have lower liquidity. In financial asset, firstly we have treasury bill. Treasury bill issued by the BNM, which is the Bank Negara Malaysia, on behalf of the government to raise short-term funds. It's normally issued in the denomination of RM10,000 and have a maturity period between 90 to 270 days. Secondly, we have bonds. Bonds is a fixed income security. Issuer in bonds agree to pay periodic interest payment and will claim it back at the maturity period. Bond has a par value of RM1,000. Thirdly, we have common stock. Common stock is an equity security. The holders can be the ownership of the firm, and owners can participate, for example, in earnings, earn dividends, and voting rights. Next, we have preferred stock. Preferred stock is a hybrid security because it has a characteristic of bonds and common stock. The holders will receive fixed dividend, and preferred stock have a par value of RM100. Other than that, we have deposit. In deposit, firstly, we have saving accounts, which is EPF, tabung haji, and banks. The money deposit will earn interest half yearly. Secondly, we have fixed deposit. Fixed deposit is money is placed for a fixed term in order to earn interest for a fixed rate. Tenor is on 1 or 3 or 6 months and up to 60 months. The deposit placed will earn interest based on the discretion of the banks. Lastly, in deposit, we have life insurance. There are still three types of life insurance, which is term assurance, whole life policy, and endowment policy. Holders will pay premiums periodically and will receive lump sum payment upon the incidence or upon maturity. Last but not least, we have unit trust. Unit trust is a pools money together into a fund and invested into a diversified portfolio of security. It is managed by a professional fund manager and returns are shared together. The example of unit trust is Amanah Saham Bumiputra and Public Ethical. Lastly, in financial asset, we have derivatives. Derivative is its value is derived from other instrument value. The value is depends on the underlying instrument such as stocks, interest rate, or commodity. Derivatives is a comprise of option, future, swaps, and forward contracts. In real estate, we have residential properties such as semi-D or bungalow. Other than that, we have agricultural land and commercial properties such as banks and hotels. And next, we have industrial properties such as factories or warehouses. And lastly, we have recreational properties such as resort or amusement parks. Secondly, we have antique and chattels. Refers to antique or stamps or artworks or ceramics and often kept by collectors.
Lastly, have gold. Gold is a precious yellow metal used to make coins, ornament, and jewelry. There's two ways to buy gold, which is gold physical and gold certificates. Gold coin in Malaysia is a kijang emas.